So we are indeed in a bull market is something that we've been saying across in all our videos as well.
And I think clearly the more domestic so-called cyclical or investment driven sectors are at the forefront of this rally. So whether it is capital goods, whether it is real estate, power, infrastructure, cement, renewable energy, electric manufacturing services, defense, I think these sectors have clearly shown, PSU banks, all these sectors have shown very good leadership. And generally leadership doesn't change so often. If it's a long-term trend, usually leadership will continue. Now obviously every sector may go through a phase of consolidation or correction, but I think the sectors that have been leading in this bull market will continue to lead.
Taking the data and cues exactly from what Hiren also said, domestic cyclicals are the ones that have led the rally both in terms of price action and earnings growth delivery as well. So it is not just hopes. We are seeing the order inflows coming through, the order book is swelling. A lot of these sectors are actually led by the initiatives by the government. Given the fact that the government has the intent to do and the means because of a stronger balance sheet at the government level, we do expect that this rally in both earnings and price front could have more legs. It may be reminded that all these sectors and subsectors, they are coming after a long hiatus of nearly 15 years. They were doing almost nothing for 15 years. We have seen a lot of consolidation and a lot of companies completely getting wiped out in these sectors as well. So who have left are the ones who have managed to weather the storm and the bad times in a right way, and they are the ones who are probably likely to have a higher chance of winning when the orders come through. So to answer it short, yes, we do expect a lot of these sectors and subsectors to continue doing well in 24 as well.
Coming to capital goods, a sector which has tremendous tailwinds, continues to do both well as far as the results are concerned, order books are concerned, and also stock performance. Essentially for the top 500 companies, for the first 9 months, the PAT has grown at 34%. And if you take non-financials, it has grown at a staggering 40%. So the first 9 months, your top 500 companies have delivered 30% plus earnings growth. If you look at the Nifty, for the first 9 months, it's 26 and 23%. So what that tells you is that the broader markets or a larger width of companies, the 450 companies out of the top 500 continues to grow faster than the 50 companies. But a 25% growth in Nifty itself is nothing to laugh about.
So where we are today, I think our macro is at its best and we have a very stable government, and as I said earlier that there is a very high probability that this government comes back. And they've also articulated that as soon as they come back, they're going to take even bigger decisions, right? So to my view, and we've held this view for a long time that we are very constructive on the markets, to me it will be a very suboptimal decision to wait for until the elections to deploy.
We remain bullish on cyclicals. Cyclical cycles actually stay for a longer time. We remain bullish on the earnings growth. There are sectors which form a very small part of the overall index currently where the earnings growth is very strong, and these can give us major multi-baggers, and we remain kind of, we look for these stocks and we will remain invested in them. From here on, we remain bullish on the macro, we remain bullish on earnings growth.
The best returns and outperform the market by a huge margin in financial year 23-24. Friends, it was the real estate sector. We don't talk about it much because much larger sectors tend to take a lot of our time, but we believe that this is a sector that we cannot ignore.
Look at the sectors which are really topping the charts, then, well, no surprises. The fastest earnings growth in the fourth quarter at a PAT level was from cap goods. The second best was autos and auto ancillaries. The third was infra, which includes real estate. We have been emphasizing for so long that it is the more cyclical sectors which are driving earnings, and that is where we also see the stock market performance.